Happy holidays, everyone. Andrew and I wanted to just send a quick year-end video. One, to say thank you for your business this year. Thank you for sticking with us during this transition period. We know there was a lot of extra communication. We definitely tried to balance not sending too much, but there was a certain amount of things that we had to pass along. And we even had a few clients ask us if it was done or if it had started. So hopefully that was a good sign that it wasn't too much or over the top. But yeah, we really appreciate you working with us, and we're excited to be heading into the new year as AJ advisors. We also, going into 2023, wanted to share some important numbers to keep in mind for next year.
Yes, so what you're going to see in 2023 is an increase to a lot of the limits that is allowed by retirement plan contributions, tax rates. What we send out every year as those numbers go up, there were larger increases this year than normal because of the raising rates and higher inflation that we saw in 2022. So starting with 401ks and IRAs, both got big boosts. IRAs and Roth IRAs saw the first increase in several years. 401ks got several thousand added to the contribution limits. So early January and even year end is a great time to review your 401k deferrals and see if you need to increase it in order to hit the new max for 2023.
Yeah, it's a lot easier to do in January because you have 12 months or 24, 26 paychecks to spread it out over. If you get behind a couple of months, you'll end up having to increase it a lot and change your take-home pay. So yeah, the bottom line is you can put more away for retirement. It helps you on tax. Go ahead and take a look at it and see what you need to do to adjust that heading into the new year.
Another one of the biggest increases, Social Security. There was an 8.7% cost of living increase for next year, which is one of the largest we've seen in decades. So you're going to see those Social Security checks get bigger. In tandem with that, Medicare Part B premiums went down, went from about 170 to about 165 or 164.80. But
who would have thought that would happen?
It was the result of one of the drugs coming down in price significantly that then flowed through.
Maybe Andrew is on it. Did not know that.
Margaret Smith informed us of that in our other webinar. So those are both big benefactors to those in retirement taking Social Security.
We're seeing a lot of folks get their Social Security letters right now. I know I've had a lot of clients ask me about, hey, even though my Social Security went up, I'm actually getting less. Mm-hmm. Sometimes that happens if you get subject to the income adjusted premiums that are based on your tax return from 2 years ago. But bottom line, send this to us. We're happy to talk it through. There may be some ways to try to remove that if you don't need to be paying those dollars. Yeah, tax brackets in general increased. We'll show you the numbers, but really what it just means is that you should be able to have more of your income taxed at a slightly lower rate.
Assuming your income stayed the same.
Yes, if your income went up, you may pay more tax, but that's because you're earning more income. But there are also one thing that we want to make everybody aware of. We only have a couple more years of the current tax laws before it sunsets after 2025. At that time, the current brackets will revert back to what they were before 2018. So you definitely want to make sure that you're taking advantage of those now. I doubt something would be put into place to make those permanent, but hey, Medicare premiums went down. So
yeah, that's right. That's up to Congress. The standard deduction went up again. So that for tax filers, a lot of you who are taking the standard deduction, you're going to enjoy that increase. The extra charitable gift dropped off. So you won't be able to take that on your 2022 tax return in addition to the standard deduction. But again, it's something we like to strategize with clients if it makes sense to double up on certain things, property tax, charitable giving in certain years, and then take the standard deduction the following, what we call a bunching strategy. So again, reach out if you think that might be relevant to you.
Or if you're subject to required distributions from retirement and you're taking the standard deduction, if you're giving charitably, make sure to use your required distributions dollars. You essentially will get an extra deduction.
Money that comes out of an IRA and goes to a 501c3 is not taxed, and it can satisfy your required distribution. So we're big fans of that.
Finally, HSA limits for what you can contribute as an individual or a family plan have increased. An HSA is one of our favorite accounts. You get one of the best tax advantages out there. It's very hard to go wrong. You get to deduct the income when you contribute, so you don't pay taxes on it. The money will grow tax deferred, maybe tax free if you use the money in your HSA for a qualified medical expense. You don't pay income tax when you withdraw the money. But also, if you turn 65, you can actually use that money for anything.
Without penalty.
Without penalty, you have to pay the income tax on the withdrawal. But it's just hard to go wrong with an HSA because that would just turn it into like a retirement account. And I believe you can even pay Medicare premiums using your HSA.
That's right.
So again, it's a great way to get some money saved up. It essentially reduces the cost of your Medicare premiums if that's what you use it for.
So coming up in 2023, what do we got, John?
Yeah, we're so glad to have the open house back this year. We had a lot of fun doing the Santa pictures this year. I think we look forward to adding that as a regular event. And yeah, we've enjoyed starting on these videos. So yeah, coming in January 26th, tentatively at 4 o'clock, we are going to have Tana Kyle with Blankenship CPAs. A lot of our clients work with Tana, but we're going to do another tax webinar, just questions that you might have that you want to ask a tax preparer. We also kind of focus on what's the best way to work with your CPA, just to make sure that they get your information, your return is accurate, everything's efficiently done. And yeah, we can't wait to have more educational webinars and in-person events. So we're already thinking and talking about those. So more information to come on that.
But again, we appreciate all of our clients, the opportunity to work with you. We appreciate your patience with us this year, but we're also very excited about taking AJ Advisors to the next level in 2023. And we hope you have a wonderful Christmas, New Year's, and holiday season.
Thank you so much.